All right, welcome back here to Trader Minute. Great to have you aboard. Want to just jump on real quick, talk the challenge here. Let's start with Bank of America, and Bank of America here today has pretty much sat up between 37 and 45 cents most of the day. After the morning, it's really been relatively flat. I've had a couple emails asking, "Hey, is this a bearish candle here for Bank of America? Is this something we need to be concerned or worried about here?" I know Carl showed a little bit of it to you. The one thing here with Bank of America, and let me bring up the 1 minute chart here. You can see how it's really just been flat all day. Most of the volumes came in the morning. It's been relatively flat the rest of the day. This is one where it becomes a little difficult to say, okay, what type of pullback do you say, you know what, we got to take profit because it's going to go lower? And what tends to say, you know what, things are still good. Okay, fundamentally, things are still really good. Technically, okay, what is happening with this consolidation is we basically get a surge back above, we get a surge here above the 7 hour moving average and kind of just a little mild general consolidation back to it. This is the point where I would expect it to march on higher, generally with a gap the next day. And so as long as we don't see Bank of America sell off into the close, even if it sells off 5-6 cents, no big deal. But everything is still in there. I would be more concerned if the financial sector in general was weakening. But it's actually doing the opposite. The financial sector up about 1%. Obviously, Bank of America leading that. Carl showed you some of the other leadership groups, but it is the strongest sector out there in the market here today. Okay. Now we jumped into another trade, and here's the thing: there are so many options out there today. This came down to kind of having to pick one out of a dozen, and went with FCX, and a couple reasons. Those who know me, you know that I like to trade FCX. The other here is just the overall technical setup with FCX ahead of their earnings here next week. And the big question, I kind of put this chart out on the email that was sent out, is this correction, this move down from 37.5 down to 35, is this the start of a broad correction or something that hey, FCX has a double top and is ready to break down and come down into the low 30s? Or is the move here at the end of December the start of a brand new uptrend? Now we get a little overextended, we get a normalized retracement, a little bit of a pullback, and now we're ready to go. We had a nice bullish engulfing yesterday, some continued follow-up buying here today. We had good volumes down at this base here overall. So what it does is we don't really have to answer that question, right? We can trade the trend where the trend is higher, right? So we trade the trend and say, all right, if the trend gives out and we're in for a broader correction, how do we know? Where does that happen? With Bank of America, at this point, we're sitting here going, you know what? It's still a little nebulous as far as where is that point where it would be bearish or real trouble. With FCX, it's not. And, I don't mind riding gains when it's nebulous, but, when with entries, I want to have a little more clear definition. And the real nice thing here with FCX is that as long as it holds above 36, we're not really concerned about another corrective leg coming in here to FCX. Okay, and we can continue to ride that. Where does it go ahead of earnings next week? I would expect it to come up and retest these highs. Could it go higher, lower? We'll see. But as long as it holds 36, and I will be very concerned if it were to break 36, no matter when. If it were to break 36 in the morning, afternoon, evening, whatever it breaks 36, I would be very concerned, and we'll probably look to pop out of that here. Okay. All right, Jeff. Yeah, if you understood correctly, earlier today you said it was normal for a stock to trade at 2 to 3 times book value. Why is Bank of America trading lower than its book value, and will it rise to 2 to 3 times its book value as the others in the sector? Jeff, fantastic question. Okay, and let me kind of go and show here the book value on Bank of America. And in this question, we're kind of talking long term on Bank of America, right, as an investment, not necessarily as a trade. But one of the things that happened, if you think about what book value is, okay, when we're talking book value, okay, we have several things out there. With earnings today, what did Bank of America really do? They talked about their income. And from a financial accounting standpoint, kind of their income statement. What are they bringing in? What are they pushing out? Okay. Well, when it comes to your balance sheet, okay, or your book value, they're addressing that with something called your balance sheet, which is simply, and Josh will discuss this further with you, but it's simply your assets minus your liabilities. Okay. So, your assets for Bank of America, your buildings, any money that people owe you, your liabilities, or your payroll, or any money you owe other people. Okay, so, the balance sheet isn't really talking about your income, it's talking about your assets versus your liabilities. Think back to the Lehman crash, subprime. Okay, what was wrong? Why did these stocks crash? Well, their balance sheet was full of liabilities, right? The big word was subprime. Okay, this was the big liability out there. And they were calling these subprimes assets. Okay, when in reality they were more liabilities. And so the book values or the balance sheet of these financial companies was severely inflated because of these bad assets, or if you want to call them liabilities, but the overall toxic nature of their balance sheet. Okay, so what happens? Investors lose confidence and they say, we don't know what are really assets and what are really liabilities. What are the assets really worth? What are the liabilities worth? We can't value this company because their balance sheet is a mess. So what do? They sell. Sell, 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 sell. We go down to book value, right? We go down to book value. We get down to book value. They say, we don't know if that's book value. Who knows what these assets and liabilities are? So they sell, 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 sell. So Citigroup, Bank of America, JP Morgan, Goldman, I mean, they all just, nobody knew what book value was. So, where they normally would find some support of book value, they haven't. Well, over the last 4 or 5 years, what's it been a process of for these financials? It's been a process of gaining confidence, or investors getting confidence in what the financials are doing and in what their numbers really are. Are they hiding assets that really are liabilities? Or has the Fed come in, taken all those, bought them all up? Have they been able to shed those? Have they been able to put the Bernie Madoff stuff behind them? Have they been able to put all the lawsuits behind them? Are some of these liabilities coming off of their balance sheet? Well, that's what's happening. Overall, over the last years, that's what's happening. And that's why the last 4, 5, 6 earnings periods, banks have gone up during that earnings period every time. Not that the earnings are great or the balance sheet is fantastic, but it's improving. Okay, it's improving. The transparency and the investor confidence continues to grow every time we have earnings out of the financials that are reflective of what the analysts have expected. So getting back to the question of trading at book value, who has been first to trade around book value? Well, your more reputable companies, right? Your Wells Fargo. Wells Fargo didn't get themselves in the huge subprime mess. So they're not going to take 5, 6, 7 years to regain confidence. They were one of the quickest banks to regain confidence to where investors were willing to pay over book value. Okay. They also had a little more cash on hand, a little higher dividend. So confidence came into those. JP Morgan, same thing. I know JP Morgan's been riddled with bullets a little bit from a news standpoint with some of the Madoff stuff and some of the other charges that the government has leveled against them. But investors have rewarded the overall improvement in the balance sheet and in the earnings on JP Morgan by pushing it above book value. Now, look, I mean, these things can typically trade two to three times book value. Why are they not? Well, because investors still are a little leery. A lot of people still have that subprime that crisis fresh in their memories. And who's being slow? Who's lagging? Let's take Citigroup for example. Okay, look at their book value, 64, and where's Citigroup trading? Around 55. Okay, so investors are gaining a little more confidence in Citigroup, right? But they've been slower to warm up to Citigroup because, well, they had bigger issues than J.P. Morgan and Wells Fargo. You know, one of the big surprises by many in the financial crisis was that Bank of America didn't go under. Okay, but Bank of America has had a lot of repair to do on their balance sheet because of what they did and because of some of the assets that were forced on them by the Fed during the financial crisis that in reality were liabilities. So investors have been very nervous about, all right, what are some of these assets? What are they really? Are they really liabilities? We're not sure. Okay, but as Bank of America continues to have good earnings after good earnings, and by good earnings, I'm not talking about huge earnings growth. I'm talking about transparency. It creates more investor confidence, and yes, in the long term, can it get back to two to three times book value? Absolutely. Would I expect that to happen this year? No. No, not at all. It will take many more earnings periods. It will take a lot more confidence to come in. But could we be sitting here 2 years from now and Bank of America is trading at $40 with a book value of 20? Absolutely. Absolutely. And they have the earnings power to do it. They have the earnings power to do it. It's just a matter of building confidence now. Okay, building confidence. Yeah, Max ML, yeah, MLNX. Yeah, this stock here, you're dealing in a low volume world. Some decent volumes last couple days. From a pure technical standpoint, beautiful signal. Probably not options on that, huh? The nice thing about this is you're dealing with a trend rider signal off of a head and shoulders bottom. So you're dealing with a pretty reliable chart pattern that's breaking out with a trend rider. So you have a lot of things kind of going for you that the downtrend is over. Obviously this is going to be news based a little. You look at this rise here from 40 to 120 back to 40. You're going to get some action there. Okay. Alrighty. So, as far as challenge goes, okay, Bank of America and now FCX, okay, and no plans to sell Bank of America or FCX into the close. I want to give Bank of America through tomorrow. Give it a chance to gap up. It's something we have plenty of time with. I don't mind holding Bank of America for 2 to 3 weeks and playing the broader move, the broader trend. FCX, I don't want to be in it that long. I really like to be in FCX for 2 to 3 days. Get a pop up here to 37.5, 38. Take it, move on, and find some more entries. Okay, you'll notice broad market here overall, still remains bullish, but we are dealing with contracting bands, and so to see the market pretty much up 10, down 10, and kind of stabilizing in this area through earnings season would not be a surprise. And there are definitely stocks out there for the bears to potentially look at. This type of pattern here on Chevron, this is a pattern here, 2010, 2011. These you lick your chops and short the heck out of them. 2013, they've not been as bearish, but we are seeing some of these bearish patterns kind of come in here in various stocks. Even short term, something like Amazon, right? I mean, you're talking about very contracted bands. Do you get upside? Do you get downside? No, you're talking about contraction, and that's really where a lot of these are. Yeah, Ray. Hey, Jeff. Going to stock charts from TC2000. What level would you recommend? Let me go show you what I have. It's nothing fancy. Let's see here. Let's say add 12 more months, and I have the extra. Don't have the extra RT. The only difference between the extra and the extra RT is the data that's coming in. And the NYSE and Nasdaq TSX data, if I were day trading with this, or I were making 10, 12 trades a day, I would want that data. But I get that data through my broker. I get that real time, more accurate data. For stock charts, when I'm looking really at daily charts or hourly charts and whatnot, the bats is plenty fine. Overall. Yeah, SLCA here. Yeah, SLCA, man, Vegas, I'm not even. This is one that I would kind of look at. Do you have bear trap potential? Absolutely. A break above 32 would confirm a bear trap. Till then, you got high volume sell off, low volume rebound. It's a little bit tough there to want to, from a risk reward standpoint, to set something up. Um, Best Buy here, we had that reversal yesterday, very little follow through, and there's just an overall drag in retail in general. Until we get some decent consumer news here, we've had decent manufacturing news. To see these things continue to pull back, the Costco's and the Walmarts and the Targets of the world, there's nothing in here that says bottom pick right here, get really aggressive right here. Could that transition, could that shift? Yes, but I would be looking for a little more confirmation than what's here. Yeah, I mean, I couldn't argue a Best Buy short, but you'd be kind of riding it lower with the 7-day moving average. The thing that the danger in this market of short, and you simply go to Tesla. I mean, Tesla here, you're talking lower highs, you're talking about a rounding top at a retracement area, you're talking about a breakdown, a pierce of the lower Bollinger Band. Tendencies would be for it to go down, and the way that these stocks that get just a little oversold whip back and just snap back so heavily makes it very, very difficult to want to get overly bearish. Even on something like Best Buy, in my opinion. Okay. FCX. Yeah, anything between $2, $2.15, really even $2.20 isn't bad there on FCX. FCX 20 cent on the options really isn't a big deal typically for it. Okay, there's nothing technically different. Why'd I get in where I got in? Well, it simply had to do with the hourly chart. We had the daily chart, the setups are there. We discussed those, but the hourly chart had this nice little consolidation back to the 7 hour, and that's kind of a nice place to get in. Very shortly after we got in, there was some buying pressure that came in. Wasn't real high volume, but a nice little place, and it really kind of Bank of America doing the same thing as FCX on an hourly basis, just getting that little consolidation back. Now FCX, just having traded FCX, knowing the nature of FCX, okay, is FCX oftentimes will not close on its high. Okay, occasionally it will, but you look at any of these upticks throughout, any of these big upticks on FCX, it's very rare for FCX to close on its high. Okay, now does that mean that you can get a cheaper price at the close? Potentially. But if it rallies another 20 cents and then drops 20 cents into the close, you're kind of same price here. But it's one where I don't think you'll lose a whole lot if you do hold out for something like 210 or 205 into the close. To get it to pull back a little bit would be typical FCX nature. Okay. That said, doesn't have to, but that would be more typical than not. Okay. All right, so we pretty much have our cash in play here for the challenge. A little nice little gain here on Bank of America here today. We expect more follow through with that new entry here on FCX. That I'm hoping we're in about 2 to 3 days here, and then what'll be nice is we're not dealing with earnings in regards to Bank of America going forward, and FCX doesn't have earnings for another week. We don't have any stocks really reporting earnings that are going to affect FCX, so it'll give us a chance here to continue to watch some of the earnings come in, hopefully while we're riding Bank of America FCX higher, and then when we're able to cash out of Bank of America FCX, we'll have a good feel for where the strength or heavy weakness is with earnings, and be able to go after and attack that there. Okay. Yeah, Mike, Solar City. Yeah, if you're talking about something like Solar City, you're not talking fundamentals like what we're talking Bank of America, J.P. Morgan, or something like that. Uh, no. These things, I mean, Solar City really would make more money by shutting their doors and turning the lights off, right? Um, are they really worth $3 a share if they're not making any money, if they're losing money every quarter? Okay, uh, these become, and this is why they're so volatile, right? This is why they're going to have huge ups and huge downs because their fundamentals are so much. There's nothing established. There's no trends. There's no major history. This is a small company trying to make it in the world, and if they catch a couple breaks or execute properly, they could soar. But if they don't, if they have a couple hiccups, they're gonna plummet, and that's why Tesla has been volatile. Netflix has been volatile. You'll notice some of the volatility on Netflix over the last year has come off as some of their earnings have been more predictable and more regular. But yeah, dealing with something like Solar City, you're dealing with something where fundamentally that most money managers can't wrap their head around it. They know it's a gamble, and so they play it that way. They absolutely play it that way. Alrighty, well, thanks for hopping on. Carl, Josh will be with you here into the close. Any questions, let me know, and we'll talk to you later. Take care.